Hi, my name is Dave Grant. I am the founder of Retirement Matters, and today we are talking about your AbbVie income and how it should not be causing you any tax surprises. So let's jump right in here. So let's look at a background. Your income of AbbVie is made up of really three main things. One is going to be your salary, which is paid to you every month, your bonus, and your RSUs, which are paid to you in the spring. So your RSUs, they're coming to you in February. It's not really any income, you're just getting some shares of stock, but it is taxable. So you are going to have some shares withheld, and it may or may not be adequate. You're going to get your bonus in March. That is going to be cash that's going to hit your checking account. And again, it may be withheld at the appropriate rate for you, or it may not. So the technical term, when we get down into the tax world, that means your income throughout the year is lumpy. So in the first quarter, you're going to get a big influx of your income, and then throughout the rest of the year, it's just going to be that steady salaried income that you get each month. So what you need to be doing is you do need to be doing some tax planning when you get through that first quarter to make sure that you have been adequately withheld, and if not, how are you going to remedy that? So taxes are the same every year. You're essentially going to get all your income. You're going to then file your tax return, and then you're either going to owe some money, get a refund, or in a very unlikely case, get zero. You get nothing back and you're not going to pay anything. I can tell people who have done tax planning throughout the year in the fact that they are not surprised if they have a balance or a refund, and they have some cash set aside to pay for it. Well, how do you get to this situation if this is not something that you have done before? Well, two important months for you. April or May, you pick one of the two. You are through your lumpy period as it relates to income. So I want you to take that paycheck, and you are going to open up a dummy tax return, and you're going to put those numbers in, fill in your numbers for the rest of your salary for the rest of the year, and then you're going to see if you're adequately withheld. Then you can figure out what to do, and we'll talk about that in a second. The other month is going to be October. You're essentially going to do the same thing, but this is going to be to make sure that the changes that you made throughout the year, they were accurate, and you are looking towards the end of the year, and your balance or your refund is going to be manageable, or it's getting close to zero. So what do you do if you're going to be over or under withheld? Well, there's two things you can really do. One, you can adjust your W-4, which is how much is taken out of your paycheck to withhold for taxes. So what you're going to do is you're going to file that, or not filing, you're going to run a dummy tax return. You're not filing anything. You're just trying to see the numbers. And let's say that you see that you have a large amount that you're going to be owing at the end of the year. Well, what you can do is you can get the W-4, and you can break up that amount that you're going to owe at the end of the year, and you can break it up throughout the months for the remainder of the year. So let's say you've got 5 months for the rest of the year, you're going to owe $10,000. You can put in your W-4 to withhold an extra $2,000 a month from your paychecks, so then that $10,000 is split across those 5 months, and there's no surprise. Alternatively, if you don't want to mess with your withholding from your paycheck, you can choose to write estimated taxes. So what that means is you can get coupons that typically come out with your tax return when you filed it, or you can download them from the IRS website, and you can write estimated tax payments throughout the year, and those go towards when you file your tax return, and then it brings down the balance that you would owe. The question I get asked quite often is, do I repeat this every year, or is this, one and done? You're going to do this every year. Tax code changes, your income's going to change, your RSUs are going to change based on the AbbVie stock price, your bonus is going to change depending on your grade level, the performance of the company, your performance. There are a lot of variables going on here. So you do need to do this every April, every October. Now, when I say you got to repeat this isn't onerous after a while. It's going to be a couple of hours of time when you go through and you put all of your income in. It can just be yours. It can be your partner's as well if that's included in your return. You'll get into a cycle. Everything will seem like, okay, I've done this before. I know exactly what to do. I've got my coupon set up. If I'm going to write that payment, let's cut a check and let's send it all in. It just becomes rote after a while. But you do need to repeat this every year just to make sure that you're on top of your taxes. So my name is Dave Grant. You can find me at retirementmatters.co. If you have any questions, you can send me an email at dave@retirementmatters.co. I actually file taxes for clients with the help of a CPA if we work together on an ongoing basis. If this is something that's of interest to you, let's chat, and I can take that burden off your plate. Till next time, take care.